Hi there, this is Chris from Money Hub, and this is a video which explains what mechanical breakdown insurance is. Just as a background, it's a product that's usually sold alongside car finance, largely because there's lots of money in it for the people selling it, and it's designed to really protect you should something happen to your car, which is on finance. Should it break down, then there's going to be some insurance policy that helps you out to get it fixed and you can get back to driving. That's what it sounds like in theory, but the reality is there's a lot of exclusions. So I'm just going to walk you through the guide. We've said that it's expensive and somewhat unnecessary, but of course that's our view. We've just based that on the policies that we've looked at, what we've researched, some guidance from Australia and some guidance from Consumer New Zealand. But of course, that's just our view, and it's not, it's certainly not the right view in any sense for everybody, but it just comes down to what you believe is right for you. Now, we've got a summary here which is sort of useful looking at. It says that the policies cost between around $1,000, and they'll cover the car for 1 to 3 years. But the problem is that from research we saw from Australia, which is very similar to here in the way it's sold and the same policies, is that 9 cents for every dollar actually gets paid out, and most of it goes up to commission. That's why if you have got a car loan, or you're in the process of getting a car loan, you will be probably offered it. Not everybody offers it, but some people do, and of course it's because there's lots of money to be made from it. Now, this does sound quite negative, but I will just walk through what you need to know, and it's good just to have a read of our summary there, because that will kind of summarize the whole guide, of course, and let you know what's important. Now, if I go down to why does it exist in the first place, cars are very pricey to fix. No one likes to take their car down to the garage or to the mechanic because everyone is scared of the bill or the quote. And I've been there myself, not pleasant. And so with standard policies, they actually will cover something wrong with the engine, something wrong, say, with the transmission, the clutch, things like that. That is useful. So that's a breakdown caused by some sort of suspension issue or something to do with the cooling system or the steering. But of course, that's not everything that's going to cause your car to break down. So I want to make it sort of first up front that there's no obligation whatsoever to buy this insurance policy. You might be watching this video because you've heard about it or you've been offered it, but I want to say straight up the front that you do not need to buy it, and you can still get car financing. That's critical to know. A lot of people think, oh no, I have to buy this, otherwise I won't get my car finance. It's not the case at all. The cost is usually added on to the car the car loan balance. So you will be paying it off over the 1 year to 5 years that you've usually are going to sign up for the car deal, but that's certainly not a requirement to get it. Now, it's really important that we look at the exclusions, because really a lot of things can cause a car not to start or break down, and exclusions can arguably be more causes than not. So first of all, pre-existing conditions. We're not entirely sure if this is stuff that you know or if it's stuff that you don't know. And of course, when you claim on things, it's always the stuff that you should have known but you didn't, but it's very hard to prove otherwise. And also, if there's anything to do with chassis and panel work, of course this probably wouldn't usually cause like glass and stuff to be able to break down, so your car to break down, but it's certainly worth knowing. And then anything, and this is where it gets a little bit tricky, that relates to the battery, exhaust systems, converters, tires, light bulbs. I'm sure they don't cause cars to break down, but they've been put there as an exclusion. Fuel tanks, keys, remotes, things like that. Cam belt failure. I've been there myself with a car many years ago. Totally failed, and eventually a friend was driving the car, it stopped working, and that was the end of that. So it was a very expensive trip down to the garage. So that would also be excluded, and so would basic things like rust, which of course is just an ongoing issue, servicing, all of that stuff. So you really need to know, well, is this for me? Because it sounds like it could be for me if some of the categories or some of the reasons for a car to break down happen, but it sounds like also that it might not be for me because I can't claim on other things. So it's all a bit uncertain, and of course you have to pay for it up front, and it's not that you can cancel it later, because I think there is some sort of limitations. You do need to look at the policy, and you do need to ask, because we haven't been able to get that many interesting quotes and answers from it, because it's all a bit smoke and mirrors. Hence why I put this video together, just to explain it in a kind of a summary, and so that you know exactly what you're doing. So our view is that there's a lot of exclusions, and we know that 2 in 3 people were offered it when buying a car, but we believe that consumer protection law is actually there to help us, that you can't just buy a car which is going to break down the day after you drive it. And if there are pre-existing faults, you do need to be told about them by law. So otherwise you can ask for a refund or a repair to remedy it. And yeah, I mean, we are very much of the view that things to do with a car can be expensive and problematic. It's certainly no science. So there is a lot of risk of buying a car, but we don't think that MBI is something that is going to protect you from all things that relate to it breaking down, should that happen. So we just say, please be wary, make sure you do a comparison. If you are getting quotes for these, and they'll come with an MBI quote as well, make sure you know what it costs and what it covers. It is worth investing the time up front to know. And if you don't know something, then just ask the people selling it to you, because they've got to answer, and it's got to be an answer that makes sense. So just read the rest of our guide. We've put together pros and cons for it. So pros, straight off the bat, it does give you some sort of safety, but not for everything. And then of course the cons is that there's a high cost up front, which you need to know about. There are exclusions which sound fine on paper, but then try and make a claim and it might be excluded. And then it's very hard to compare. So you're only going to get these quotes, and you're only going to get these policies given to you when you go through the car finance process or buying a car. So it does make it kind of annoying for us to try and get the latest information, because it is, as I said, very difficult to gauge, which makes it slightly dubious in itself. So there are alternatives: self-insuring, getting a pre-inspection done, making sure that you know exactly what the state of the car is, and then you should be able to avoid it altogether if you do that. At the same time, some people will still take the policies just because they want some protection rather than nothing. So who offers it? Lots of people offer it, and if you have any questions, we've got a very comprehensive frequently asked questions here. If you have any questions which aren't answered here, please write down in the comments below, and please email us if that's easier, because we'll certainly update our guide as we constantly do for these type of things. So as I say, we're not huge fans of it, and our overall view is that there's lots of commission involved in it. There's not a lot of protection offered to you, the buyer, and just do keep that in mind. It does make car finance more expensive, because the cost is usually going to be added on to your loan, and so you'll be paying that off over, say, 1, 2, or 5 years, or whatever you sign up for. And it's certainly not a requirement to buy when you get car finance. So thank you very much for listening. We wish you the best of luck, and please always, before you sign up to any car finance deal, do a proper comparison of lots of quotes, lots of finance deals, and make sure you understand exactly what you'll repay, because car financing, if it's not affordable on day one, it can get even more unaffordable later on. Thank you so much, and best of luck.